The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Coach D with TackleTrading.com, here to give you a market update and a recap. We're looking at a chart of the E-mini S&P futures. And after yesterday's big heavy drop down in here, we're talking about this big red candlestick here that closed down near that trend zone. Today what the market did is kind of interesting. What it did here is it opened up and it ran down below that zone, violating that, but then it recovered intraday and came back up and closed up above, and so it actually closed positive for the session, which could be a sign of strength. You got a little bit of decent volume in there. I'd say just above average. And above all, that's kind of a signal of it's right in the middle of the recent resistance. It just set a new support zone. It's kind of back up inside the channel. Let's take a look at that intraday and get a look at that, how that really played out. So here you can see the intraday. I've got a little trend line drawn out here just on the bottom of the channel. And here you can see where it broke down below that, put in a double bottom, and then it rose back out and closed up near its highs. And that really puts it in kind of the middle of the trend channel ballpark, and then you have the top of the trend channel. So whenever you're channeling, you usually have a top, a bottom, and a middle. And so it's in the lower half of that, and whichever way this ends up trading, if we do see it trading up, you'd probably expect it to cross back up towards the top of the channel. So we can watch for that. If we start to see it trade down, and it starts trading down even a little bit, that bottom of that channel has already been pierced once. So if it breaks 1900, you're probably going to see it really give us another run down, and it would probably come back down and retest those lows pretty quick. Not sure which way it was going to go, but if you were watching the coaches show yesterday, Coach Gino talked about the Traders Index, the $TRIN Traders Index, also known as the ARMS Index, and he was talking about how the Traders Index yesterday traded up over 2, and anytime it gets up over 2, 2.5, that's meaning the market's out of balance. So what this measures is advancing issues versus declining issues. So it's taking advancing issues versus declining issues. And what that is stocks that were ticking up versus stocks that were ticking down. And when it does the math and figures that out, if you get more stocks on the declining side, the TRIN pops up. And if it measures above 2, it's starting to get out of balance. If it measures out above 2.5, it's getting way out of balance. And what that means is you don't have much of a market. Everybody's selling, nobody's really wanting to buy. So the market makers, to make a market, kind of hold off on the sellers, and they only focus on the buy order so they can balance the market out. And so that usually leads to at least a one-day reversal. And it doesn't necessarily mean it's going to be a long-term reversal, but it's really a good signal for one day. And so now the trend's back down. It doesn't necessarily mean it's out of balance, and that balance could be recovered. So it'll be just interesting to see which way the market plays out as we head into the remainder of the week. So let's go back to the E-mini S&P. And the other major market indices play out about the exact same. And so really what to watch out for this week is as we head into Thursday, the big tentative thing is Friday. Friday, you have the non-farms payroll report and the economic jobs report. You have the actual unemployment rate coming out. And the market might play a little bit of wait and see. So if we do see an upward day tomorrow, expect it to probably not no more higher than the top side of the channel. And if we see a down day, and it violates that channel, we'll probably expect a good 1 ATR drop. But then from there, we'll kind of see which way it goes. We may not get that big of a day because of the anticipation of the jobs, the jobs report. So keep that in mind and keep your eye on that calendar every week, so you know what's coming down the pipeline, and trade what you see on the chart. And follow up with, go check out the stocks from the stock report and the options report, and make sure you check out the commodities and forex reports as well, and just look at some of those setups and trades that they got. This is Coach D, TackleTrading.com.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.